Hello, guys. Dividend Enjoyer here, and today I'm going to be talking about why I decided to buy more defensive stocks recently and why I think it might be a good idea to be buying specifically waste management and some of the other REITs that I've had my eye on for a little while, but have been kind of hesitant to get into for a couple of other reasons. Um, Before I get started, I'm just going to ask you guys humbly, can you please hit the subscribe button because it really helps out the channel and it really helps me out. Now that that's out of the way, I'm just going to say I was talking about buying a lot of tech earlier in the year when everyone was kind of disgusted, I would say, with tech, with the kind of M&A spending that they had and just other types of spending that they've had in terms of developing a lot of the AI and a lot of the physical infrastructure, some of the hiring for AI. I think Wall Street's starting to sour on it a little bit. So it's kind of split, right? But really, tech was very undervalued for a while earlier, and you could see it. There was a big crash. There was uncertainty about these tariffs. There's a lot of uncertainty about the Fed as well. Just a lot of things that the market really did not like, and everything was crashing. And in that time, I said, this is when you want to buy tech. Like, you don't want to buy waste management right here unless you're really going to hold it for a while. Because waste management was rising, actually, at that time. It was actually the best performing stock in my own portfolio at the time when I was saying don't buy it. And the reason for that at the time was people were really scared, so they were putting their money in waste management. Well, now people aren't as scared, right? So waste management does not command the same sort of premium that it had previously because people are trying to not miss the, get rich quick AI double, triple Zuckerberg special that they're going to get tomorrow night outside of the Chili's. But instead, they really should be focusing on long-term gains that they could be getting in very safe defensive stocks with very, almost, not the G word, but pretty much guaranteed cash flows. You can't say guaranteed, obviously, but I think it's very unlikely that many of us are going to stop paying our garbage bills, which is why I really wanted to get into waste management and why I really thought that waste management could be a wonderful stock for the rest of my life. It has over a 1% annual dividend yield, but that's not the impressive thing. It's actually the fact that the compound annual growth rate of the dividend is very high. And if you pay attention to the industry, its economies of scale does matter, meaning that a bigger competitor could definitely bully a smaller guy, but M&A is not frowned upon in this area of the market. M&A is actually encouraged, and it usually makes sense because there's better synergies for the bigger garbage company because it's more difficult for them to grow, so there's a premium on the growth they can get. And for the smaller company, the larger company is actually offering them a value that's higher than the intrinsic value that they've calculated themselves for their own firm. So they're getting a premium on what they believe their own firm is, usually. So everyone really wins in M&A in terms of the garbage industry, especially the banks that obviously write everything and collect that money. But they get more kind of equipment, shares, landfills, all that sort of thing, and they continually do that, but they also have other sectors of growth that they're looking for. Just in terms of the natural gas harnessing that they've been doing with the methane gas underground, super interesting. A lot of recyclable things that they've been doing that's really cool. And overall, I just think that this business is going to continue to grow despite a lot of uncertainties. And you should be wanting to buy this stock not when there's a global catastrophe. You should want to already have this stock when things are going very well, and it's actually cheaper to get in comparison to when there's an emergency and everyone wants the stock. And vice versa, probably if there is like an emergency situation and the stock starts running up, you should probably sell. If you want to play this game, if you want to just hold it long term, I think that's probably the thing I'm going to do. I think it's a better strategy too with taxes, but you could very easily justify selling off a little bit of waste management if it does very well in a defensive situation, and then buying a stock that's free falling like a Microsoft, where you could have made a lot of money back. And I actually theorized that Microsoft and Amazon would be the two best performing Mag 7s. I said that Meta also had a chance, but I really didn't think it was very likely. Meta obviously is like the top performer, but nonetheless, I mean, the time to buy them was when they were dipping. I still think if you buy those stocks, you might even outperform waste management. Very likely could happen. but you're taking on a little bit more risk right now, and I don't really want a lot of risk. I'm very risk adverse. I want to buy things for where the risk reward ratio makes sense. And now that a lot of these tech stocks are a little bit more expensive, I don't know if I really want to pay the premium, especially with Waste Management being under 230 with what I thought was a pretty good quarter. I really would just want specifically Waste Management. I also want to have more Vici. I don't want that to get away from me. I'm trying to just buy a lot more of that because I really like the yield that I'm getting from it, and I think that it's a very fair value, and I want to hold it for the long term. So I really like Vici as well. I'm trying to buy more shares of that. But really just going for more defensive plays now and trying to make my portfolio more heavily weighted with stocks like Waste Management instead of as much tech, just because I think that Waste Management is really going to be like a generational type of company, like the type of company you just want to buy and hold forever. And I don't think that there's a lot of companies that have still a lot of growth and are this reliable and defensive and safe. I really can't even imagine a more safe type of business model than trash. I really think it's almost like the perfect business, and I want to have a significant amount of money in it. And I think this is a good opportunity right now. I'm trying to put more into it gradually. I'm going to make a video, obviously, going through my full portfolio and talking about what I specifically added in the amounts. But I really wanted to make this video just kind of reflecting on the fact that, I think we're really in a time where defensive stocks, that's where you want to be. That's where you want to be adding right now. I think you could even take your pick. If you don't like my picks, if you don't like Vici or Waste Management, you go with Sherwin-Williams. You go with Procter and Gamble. I don't even think Johnson & Johnson's that bad. I haven't done a video on them in forever. Colgate Palmolive, that's a good one. Pepsi, Coca-Cola, take your pick. I think some kind of defensive stock right now is probably going to be strong, preferably something where you still have the prospects of growth and, you're not going to be as affected by inflation because the cost of whatever machinery or items you're doing are very inflation proof because once you buy them, you're just writing it off at that amount. Like the railroads, I think would be not a bad investment either. I made some railroad videos. I think that's a very monopolistic industry, just like Waste Management is. And there is a lot of capital that goes into the actual maintenance and the physical cars and gas and all those things. It's not very good margins, but they're still making money. And there's not really anyone that's going to compete with them. It's still a way to move products across the United States. So I think railroads could be good as well. I really think that the reason Waste Management is really the perfect business is that it's almost impossible to get landfills as well, which is a difficult thing. Just the fact that even if there is a really bad recession, people are not going to stop paying for garbage in the U.S. And I just think that it's going to be worth a lot more in the future as well. The organic growth's there. It's consistent every single year. The business is very strong. The business seems like it's thriving. And it really feels like tech and all these things are really back. And I think that there's going to be a lot more potential momentum upwards. I think that these stocks could be worth a lot more in the future. And I'm already pretty heavily invested in them. I don't really necessarily want to put too much more in. If there's an opportunity, obviously, that makes sense. I'll go for it. But I really want to just get more defensive stocks that are going to really pay a lot more consistently and slowly, not as much volatility, just consistently adding gains over time. I think that makes a lot of sense for my portfolio. I think that if you're playing a long-term investing, if you're employing a long-term investing strategy, you probably want very safe, reliable stocks that are very boring, that you're getting at a very good price, that you can hold for a very long period of time and collect the dividends for over a very long period of time, because I don't really ever plan on selling my Waste Management. I really just want to hold it for a very long period, collect the dividends, and just feel really good about it. Maybe sell 4% a year or something like that. But I really want to build up the position first so that it can really grow and contribute to it until It just gets to a point where it doesn't make sense to buy it. Maybe it's too expensive. Maybe it makes more sense to buy tech again, because I think that it will make sense to buy a lot of tech again. I just feel like the prices are too high for my personal level of understanding, because I don't feel like my level of understanding is deep enough about the future of AI and the prospects of AI to make a really informed decision necessarily, unless I see something as quite cheap. And I think things are close to fair value. Um, and I'm just going to sit with those positions that I have. I think that I'm going to go for the more defensive industrial stocks that I think are being really undervalued right now. And I think that the top of my list is waste management. But I also really do want Vici. I think that REITs are going to be really good. And I think that Vici is the best REIT in the S&P overall. I don't think that there's necessarily a better REIT out there. And with rate cuts coming, we're going to have refinancing. And I'm overall very bullish on these more boring companies that consistently make money rather than the next AI play. But I am still very bullish on Salesforce as well. I did buy one more share of that. But I bought a lot more waste management than I bought of Salesforce. And I'm going to continue buying more waste management as long as it stays below that 230 mark. I think that waste management is the right play. I've considered shaving some of my other positions that I'm up a lot more on and just funneling them into waste management, just because I think that, again, it's a very safe, secure kind of play. Thank you guys for watching the video. I really appreciate your support and all of the time that you guys put in to make the channel what it is. From the bottom of my heart, thank you. If you guys like this video, please check out some of my portfolio playlists or some of my stock analysis videos where I go through a valuation of stocks in the S&P or that are requested by viewers like you. Thank you. Bye.